and you are trying to get in contact. Okay, we are now live on YouTube. Now we can go on YouTube. Our YouTube is connected. Now we are live on YouTube. Thank you guys for the patience on YouTube. So those of you who are watching from YouTube, thank you. Now we are live on YouTube as well. We are live on the TikTok. So traders want us to analyze GBP yen as well. GBP yen, okay. JPY, okay, that is good. GBPY, okay. Okay, we have that. That is the GJ. Okay, which other assets? Okay, now let's start with this asset right now. This we have gold, Australian dollar paired against the USD, and we have the British pound sterling paired against the USD. So these are the assets we are going to analyze in this live stream. So thank you guys. Thank you. So first, let's go through the gold market, since the first trader in this live stream, someone said Euro JPY. Okay, someone also said Euro JPY. Okay. Seems currently right now all yen is currently weak in the market. So for now, yen is currently weak in the market. So if you are a trader trading yen, you should be careful. Be careful if you are a trader. If you are trading yen, be careful, because currently right now yen is currently weak in the market. Yen is weak. So if you are trading yen, you have to be very careful. If you are trading yen, yen is currently weak in the market, right? So first, let's go to the gold market. I believe you guys now have your charts like this. Your chart is as clean as this, right? I believe your chart is as clean as this. So if you do not have a clean chart, this is how your chart should look like, right? So I'm going to reduce the volume right here. So this is how your chart should look like if you are trading gold. If you are trading gold, this is how your chart should look like if you are trading gold, right? If you are trading gold, this is what you need to have on your chart. This is how your chart should look like, right? So currently right now, I am going to share the link to the live stream for those who want to watch on YouTube. So the live stream right now is on the YouTube page, right? The live stream right now is on the YouTube, on the TikTok, on the Telegram page. Yes, it's on the Telegram page. So first, I stated, the gold is still in its bullish uptrend. The bullish uptrend on gold is still active. Let's check the 4-hour chart. This is what we have on the 4-hour chart, and then we have a new ascending trend line which we can connect from the swing low of the 1954 all the way down. You can see that we still have this trend line. We still have even trend. This trend is not respecting way price in the nice way. We still have gold in an uptrend. So you need to have that idea that gold is still in an uptrend, right? And then I try to find a way to connect a trend line based on the price fluctuation we have on gold, but seems the price is not respecting trend line. No, the price just keeps on bouncing up. No, so you shouldn't try to fit in your trend line when price is not respecting trend line. That means that market is not moving based on trend line or analysis, right? So gold is still in an uptrend. The uptrend is still active, and I can't technically see any bearish interest, right? So let's keep on monitoring gold. And then for those who want to long gold, based on my own trading style, I haven't seen a nice entry zone. So currently right now, I'm just monitoring gold to see what gold is going to offer us. Maybe it's going to be the continuation of a bullish rally, or maybe a downtrend, right? So I haven't seen any reason to go long or short on gold based on my own personal trading strategy. So I am just monitoring gold, and this is why I trade a lot of currency pairs and markets. So if I can't see any technical reasons to go short or long on a particular asset, then I would rather divert my attention to other markets, right? Someone says, should I hold? So if it depends on the direction you want to go. So if you want to, if someone says should, so I should hold my buy entries. Yeah, it depends on where you make your entry. If you make your entry at this pullback down right here, then you can still hold on to your long entry. It depends on where you make an entry. If you make an entry at the low right here, if you make an entry at the low, remember in the last market analysis I gave on this on our live stream, if you haven't been missing our live stream, I stated if you want to long gold, if you are interested to long gold, you shouldn't long at the high right here. It is better you wait for a pullback to this dynamic trend line structure we had. This was my analysis in the last live stream we held on gold, and this is actually playing out right now. So if you accumulated or if you long gold at this structure right there, then you can still hold on to your position right there if you accumulated low. No, the market will prove your analysis wrong if the market can close back below this low structure of this rising channel, which means this rising channel is not holding price and price is not respecting this trend line. So that is if you accumulated or long gold at this median right there. But if you long gold at the high right there, then you still have a long way to recover your losses. Okay, so if you accumulated gold right here, you still have the higher possibility to still have some profit to defend. Okay, but if I were you, if I am planning to accumulate right here, based on this candlestick bars right here, I am not comfortable with the price actions right here. What I want to see in an uptrend is either I have a bullish Arami or a pin bar and a govern bar, or a strong bullish Marubozu candlestick, or a kind of a price action technical bar. So for example, what I have right here, I don't like the price action right here. So but if you want to get in right here, you could be looking out for a chart pattern breakout, like a double bottom structure. So what we add right here is like a double bottom structure. If you navigate to the lower time frame, like the 1 hour chart, you'll see this is a double bottom. So this pattern right here could be a double bottom breakout. So if you accumulated gold, or if you are in a long position on gold, then you are still technically in a nice direction, right? And not until if price can ensure a strong bearish close below this last higher low structure, because technically if you're in long position, it means you are riding the bullish structure, market structure right here. You are riding a higher low structure if you are trading gold, right? So you shouldn't buy at the higher high, you buy at the higher low potential structure. So visuals, if you have a long entries, you are seeing the right technical direction. Okay, so your stop loss technically should be at this swing structure right here. That is if you are trading based on a swing trading strategy. But if you want to trade or if you are trading the possible breakout of this double bottom on the 1 hour chart, if you are trying to take this breakout of this double bottom, then the best zone to have your stop loss as well would be at this high low swing right there. All right, so that is my view on gold for those who want to take gold. All right, so now let's check what we have on Australian dollar paired against USD, as been requested by one of the traders in the live stream. So we have Australian dollar paired against the USD. So let's check on the day chart. Based on what I have on the day chart on the Australian dollar paired against the USD, I am not, based on my own personal trading strategy. So I have to relate things to my personal trading strategy, because there's a lot of strategies in the market. So you could have a reason you want to short or long right here, but technically based on my own personal trading experiences and strategy, I can't see any trade setup or trade opportunity right here. So what I have right here is a ranging market, or what we call a choppy market. In fact, this is not a ranging market. This is just like a choppy market, where we could call it a ranging market in a descending channel. So if I should apply my channel right from the swing high right here all the way down, we have like a channel. So price is still bouncing through this channel right here. So let's remove all these drawings on this price chart. You can see what we have, and then let me enable my pen right here on the chart so that I can construct what I have for you guys. So from the high right here, if you connect it down, and then from the low right here, if you connect it down, you can see what we have right here is a transformation of price in a channel in a downtrend. So if we want to look for a long entry, we should be looking out for a breakout, a retest. We actually need a retest in this market because the market is in a downtrend. So if you can see a retest, the retest will give us a confirmation that yes, this downtrend is definitely giving us a strong reason to long. So the retest is a technical signal that yes, the support, the upper resistance in this downtrend is gradually giving us a reason that okay, it's about to turn to a dynamic support for price for an uptrend. So that is what I can see on the price chart of Australian dollar paired against the USD. So for now, based on what we have right here, is still there isn't any reason to look for long entry or to look for short entry. And if you want to look for short entry right here, I can't see any reason you should be looking out for short entry, because if you are looking for short entry right here, you are actually putting yourself in a choppy market. So this is a choppy market. You should be looking out for a clear and well-defined market, right? So based on Australian dollar paired against the USD, based on my trading strategy as a swing trader, no, I can't see any reason why I should be looking out for a long entry or a long position on Australian dollar paired against the USD. So for day traders, let's check the lower time frame. So for day traders, you could be looking out to trade price from the bounce off of this minor structure of resistance structure right here. You could be looking out to trade maybe from this bounce up right there. So this could be a ranging medium for short time traders. So if you are a scalper or a day trader on the 1 hour chart, you could be looking out, maybe you want to start shorting Australian dollar at the upper resistance structure we had right there. So if you are looking for that, then that could be right for scalpers or day trader, but you have to be very careful as a day trader or as a scalper, because from this low swing right here, we add a higher low structure right here, and this is another higher low structure. So if you are trying to short right here, you need to see a strong technical reason to short. So as a day trader or as a scalper, if you want to short based on this asset we have right here, I think what you need to do is to look out if price can give us a head and shoulder chart pattern. So if we can have a head and shoulder chart pattern right from the fluctuation of price from this level, if the price can break this neckline of this pattern and then give a retest, then that would be a nice sell or short entry on Australian dollar paired against the USD. So this is a day for day trader. So if you're a day trader, I think this is the best way you can approach this asset, right? But based on my trading strategy, I am looking out to hold position for a long period of time. So based on what I have on Australian dollar paired against the USD, it's not a kind of trade for my trading strategy, right? So I just want to get into a trade that gives me more reasons to stay in the market for a long period of time, so that I can tend to have more profit, right? Because I don't like to always trade all the time, view the market or stay close to the market all the time. So as a day trader, as a scalper, it means you want to stay closer to the market every hour, every opening of candlestick in the market. So as a swing trader, I just want to take a trade that will give me enough time to do other things I have or I need to do, right? So that is based on my own personal decision on Australian dollar paired against the USD. And the next what we have right here is the JPY paired against the Japanese Y. So I already checked the 1 hour chart. Okay, GBP paired against the Japanese Y. Let's go through that. JPY paired against the Japanese Y. So based on JPY paired against the Japanese Y, remember I stated we still have a potential upright head and shoulder on the price chart based on the daily chart. So let's check the weekly chart. The weekly chart is in a strong bullish rally. So we have a strong bullish rally on the weekly chart. On the day chart, the price is still in an aggressive bullish uptrend, but we can see a potential head and shoulder chart pattern. And take note, an upright head and shoulder is not yet confirmed, not until we can see price breaking its neckline. So this is what we have as a upright head and shoulder chart pattern, right? So as an upright head and shoulder chart pattern, this is what you have. The pattern is only confirmed when price closes below the neckline. So this is the neckline right here. This is the neckline. If we can see a break of price of this structure, then this is when the entry can be made, right? So without seeing this on the price chart, then the head and shoulder is not yet confirmed. So what I am technically referring to right here is this head and shoulder chart pattern right here is not yet confirmed, or it cannot yet be stated as a potential head and shoulder chart pattern, because what we add right here is the neckline. This is the neckline of this head and shoulder right here. So price need to break this key level support and the neckline before we can say yes, this is a potential head and shoulder chart pattern on the day chart of British pound sterling paired against the Japanese yen. So currently what we have right now, price is still moving within the range. So for those who want a long right here, I am not looking for a long entry and I am not looking for a short entry. So I am patiently waiting as a sniper, waiting for the right time for me to strike. So I don't want to get into a trade whereby there isn't any technical strong reason for me to long or to short. So there is much money to be made when you can develop the habit of waiting for the right time to strike. You know, there is much more money to be made when you can exercise patience. If you can exercise patience for the right time, then you see your trading journey will improve in a positive way. So for now, I can't see any reason to short or to long on British pound sterling paired against the Japanese yen based on my own trading strategy on the higher time frame. You know, I traded on the higher time frame. So on the day chart, on the weekly chart, I can't see any reason why I need to put myself in this type of market based on the previous higher highs we have right here, and then we have a ranging market at this medium right here. So this is what I can see. So based on the 4-hour chart, let's see what we have on the 4-hour chart. Based on the 4-hour chart, if you're looking out to trade right here, I don't think it's technically right to long. If you are longing right here, you are longing at a resistance structure. You can see when price got to this medium of this peak, price made a bearish pullback. Likewise right here, price make a bearish pullback. You can see the bearish pullback. So if you are trying to long right here, there is higher tendency price could make a bearish pullback. Anyways, there is a lot of strong bullish momentum right here. From this swing low right here, you can see the strong bullish candlestick we had on this price here. So the tendency price could still continue in its uptrend. But based on the higher time frame, I tend to make my final decisions from the higher time frame, which is the day and the weekly chart. So based on what I have on the weekly chart, I'm seeing a lot of strong bearish technical signal, and then from the day chart I'm seeing a lot of strong bearish technical signal. So once the higher time frame is telling me the trend has a strong bearish technical signal, then I have no reason for me to be looking out for a buy or for a long entry when the higher time frame is telling me no, the market has a strong bearish technical reason. If we had gotten, or if we had a bull or strong or sentiment based on the weekly and the day chart, then I would have been looking out for an entry. But based on the upper shadows we have at the extreme high right here, the upper shadow right there, this is a signal that okay, there is a strong resistance right here holding price from the weekly chart. You can see we have a consecutive 4 weeks. We have the first week on the 14th of August. We have the formation of another week on the 21st of August. Another week once again on the 28th of August. We have another week on the 4th of September. So this resistance structure right here has been holding price. So I don't just want to long into resistance. I don't want to long into resistance. So this is my idea right here. So instead of putting myself in a risky trade, I would rather divert my attention to other currency pairs, right? So that is what I have on the JPY. Based on the 1 hour chart, what I have right here, based on the 1 hour chart, price is still at resistance structure. So you shouldn't long high. The best thing to do is when you are trading this type of market in a resistance structure, you should be looking out for a short entry. Whenever price is trading at a key level resistance structure. So this is what I have right here. So technically, I am not looking out for any trade on this currency pairs, right? So that is my view. Thank you, guys. So any other question you guys want to analyze in this live stream? So let's go through. Any other market you guys want us to analyze? And let me know through the comment section, right? So let's check what we have on Euro paired against the JPY. Euro paired against the JPY. Let's go through Euro paired against the JPY. Euro paired against the JPY. Euro paired against the JPY. Euro is technically strong in the market right now. Euro is technically strong. So this is what we have on the chart of Euro. You can see the chart of Euro is on a strong bullish aggressive rally. So based on what we have on the weekly chart, let's check the weekly chart. Based on the weekly chart, this is a ranging market. I don't like to trade this kind of a ranging market right here. This is a ranging market. You can see that. You can see this is a ranging market. This is just a breakout. This could act as a continuation right here. So my analysis, most time when you view my analysis, I always state I don't like to take a trade like this. I don't like to take a trade like this. I'm trying to follow my trading rules. You need to have a set of rules that guides your trading activity in the market. Without a trading rule, you can never be profitable. You cannot be consistent. It's not all about executing a trade and making profit. It's all about how consistently can you execute that trade and repeat that profit making system. So that is a key factor right there. So it's not just about executing a trade and then making profit. It is how long can you repeat that system to repeat that profit making system. That is the question. So anyone can get into the market and buy today and long today and make profit, but tomorrow can you execute the same system and continue that profit? So that is the question. So that is why you need to have a set of trading rules and plans. So these trading rules will guide your activity. So when you are making profit, you know, okay, this is the trading rules that made you profit. And when you are making loss, you know, okay, you are still following your system. So at the end, if your trading system is formulated, you still have a edge to be profitable on the long run. So this is why I always try to stay obey my trading rules, right? So that is my view on Euro paired against the JPY. So I already gave analysis on JPY. So if you missed the analysis on JPY, I think you have to check a copy of this live stream on YouTube, right? So you can join my Telegram group. In my Telegram group, I already paste the link to watch this live stream on YouTube. So I'm not going to repeat myself on any analysis I've given in my live stream. So we need to move forward, not going backward. All right. So let's move to other assets. I've already given analysis on JPY and Euro Yen. So if you still need more analysis on JPY, I mean, then navigate to my YouTube channel. So let's check Euro Yen on the 1 hour chart. So on the 1 hour chart, well, price is making a breakout. But based on what I can see right here, I don't trade this type of market structures. I don't trade this type of market structure right here. So to me, this is just like chasing the trend. To me right here, this market structure right here is just like chasing the trend. We have a ranging medium right here. Suddenly we have a breakout. Some traders could be looking out for a breakout entry right here. But this is not the kind of way I trade. So based on what I have right here, I don't have any reasons to long or to short right here. Well, if you are in a long position, I think you are in direction of the market trend, right? So if you're in a long position on Euro paired against the Japanese yen, you're in the direction of the market trend. But take note, at times you could be in the direction of the market and then you see have a losing trade, right? So my trading strategy right here does not give me any reason to long or to short right here, but this could be a breakout entry for those who want to continue the market trend. So this is a day chart as a breakout entry right here. If you miss the first breakout right here, then it's better you look out for a pullback after the end of the daily candlestick today. If you can see a pullback to the high of the previous resistance structure we had at the price of the 159, this is the high structure right there. If you can see a pullback entry after the close of candlestick, then a long entry could be a nice trade, right? But we haven't yet known what would be the outcome, what would be the result of this day candlestick right here. Maybe it's going to have a sharp pullback, or maybe it's going to continue the uptrend. So it all depends on what price can carve today. So this is one of the reasons I am a long-term trader. So I majorly trade from the weekly, day, and the 4-hour chart. And before I execute a trade on the 4-hour chart, I must have already figured out my technical signal on the day chart and the weekly chart. So if I'm going to trade this trade right now, based on what I can see on the day chart and on the weekly chart, if I'm going to go long on this currency pair right here, then I have to be looking out to see the end of close of the day candlestick. So after the end of the day candlestick right here, which is on the 1st of November 2020, this on the 31st of Tuesday, after the end of close of day candlestick on the 31st of October, which is today, then the next day, if I can see that, okay, the daily candlestick carved this bullish strong bar, then the following day, then I have to be looking out for a retracement entry. So I use the 4-hour chart for retracement entry. So this is why you see me, I always look out for trade opportunity from the weekly, day, and the 4. So once I figure out the weekly and the day charts are in conformity, then I look out to execute trade based on the 4-hour chart, and I'm looking out for retracement entry on the 4-hour chart. So right now I am not going to chase the trend if I were you. So if you're those of you who want a long euro yen, so right now you could be looking, if you are jumping in right here, it means you are chasing the trend. So there could be a suddenly market reversal and you are reversed down. So this is why you have to be very careful. So based on Euro JPY, if you want a long right here, I think the entry you are the strategy that can only work right here is a breakout trading strategy. And if you are taking a breakout trading strategy, that means you are trying to trend in direction of the momentum in the market. And if you are trading a breakout trading strategy, then you need to reduce your position size. You need to reduce your risk, because breakout could offer a good profit or ratio, and as well it could eat deep into your trading account if things goes in the wrong direction. So you have to be very careful. Someone said, are you selling USD at the moment? Currently I am looking out for long entry on Euro USD. I'm looking out for a long entry on Euro USD. I executed a long entry on Euro USD last week. If you are in my Telegram group, I executed a long entry on Euro USD, but I stated I don't want to wait. I don't want to hold the trade to the end of the week, so I have to close the trade. So that was what I did last week. So last week, it was on Friday, we made a long entry right there, and I sent it out before I went on the weekend vacation. I stated I'm not going to hold on to euro or trade. I'm not going to hold on to the trade over the week. So I exited the trade right there. So I'm still looking out to see a nice entry if price can make a pullback. But currently right now, I am not looking out for any long entry on Euro USD, because the market is already at the high structure. So I don't long at the high level. I long from the low structure. Likewise, I don't short from the low structure. I short from the high structure. So currently right now, price is at the previous higher high swing right there. So currently, based on what we have on the Euro chart, if you are trying to long right here, then you are longing into the high. So I'm not longing into the high. I'm always looking to long from the low. So we should have taken this trade on Monday right here, but I don't want to trade again for the remaining of this month. I could have made an entry right here that was on Monday, but the reason why I didn't want to execute this trade was based on the reason that this is the month is almost coming to an end, and whenever the month is coming to an end, I'm always very careful, and this is the time I'm waiting for the monthly candlestick to be formed. And as well, based on my track record this month, I've been able to close a nice profit this month, even beyond my expectation. Every month my target is to make like 5% return on my track record on my portfolio. But currently I've made over 15% this month. So making over 15% profit in this month is okay. So I don't want the market to take back my profit. So what I'm looking out for right now is to look out for a way I can re-strategize and fight for the month of November. So for the month of October, I'm done trading. I'm done trading for the month of October. The profit is made. It is beyond my expectations. So currently right now, I am not looking out for any trade entry for the remaining of this month today. So I'll be looking out for trade opportunity next month. So I want the monthly candlestick to form so I can have a better decisions. I can make the best informed decisions in the market. So this is what I have, and as you can see, this is the track record so far in this month. 16.52% made on the Telegram group. So this is a track record for the Telegram group. So if we are able to make 16.52% in the month of October, so this track record, this profit is okay for this month. So I'm not going to trade this month again on this account. So I have a lot of accounts anyways, but based on all my track record are good this month. So I'm not looking out for any trade opportunity or trade anything this month again. This month is done. 16.52% is okay for me to go for this month. So I'm looking up for next month, right? So you have to be disciplined in trading. If you are not disciplined in trading, you can never make profit in trading, because when you make profit, the market will still get it back for you. And as well, to become a successful trader, a profitable trader, you need to know when to take a break from trading to avoid over trading. So Actually, I made almost 18.8%, closing to almost 19% this month. So I was trying to see if there's a way I can take any trade that could make it to be 20%, and I have 2 consecutive losing trades. So you can see now from 18.8%, this account is back to 16.5%. So I am not going to trade on this account again. The month of October is done, and it is done. So that is good. Now we are looking up for the month of November. So I'm waiting for the monthly candlestick to be formed. So once the monthly candlestick is formed today, then I'll be able to make a fresh analysis based on my trading strategy, right? So that is what I have. All right, let's check the British pound sterling paired against the USD. British pound sterling paired against the USD. Let's check what we have on the day chart. On the day chart, the chart is still choppy. We haven't yet seen a defined switch of market structure. So we don't have a market structure right here on this chart. So if you are trying to long or to short, it means you are just trading a choppy market. You are trading a choppy market, because what we had right here is a low high swing. We had a low high swing right here, and the right here we have a low high swing. So the market is still in a downtrend, right? So we see how we are still in a downtrend, and based on what we have at this level of the support of the 1.21278, we have a support structure right here. We have another support structure right here. So we are having a potential double bottom. So this double bottom is yet to be confirmed. So currently market is at a neutral zone. So if you are trading this market right here, you are trading neutrality. So the market is at a neutral zone. So the market is not trending up and it's not trending down. So this is a ranging market, but I cannot call this a ranging market. This is what I call a choppy market. So for you to be able to make a better decision in the market, I think you guys need to check my website where I post trading setup ideas on my website. You can visit the link on my bio to check my website. I have a lot of forex market gauge that can help you to have informed decisions in the market. So I have some content I do create every week. So let's check it out. Someone asked a question again. What's the other question? Someone saying, can you please kindly rewind on JG? I already gave analysis on JG, but let's just try and see if I can get back and repeat myself. So let's check that. Based on GBP, USD, JPY, this is what I have on JPY. On the day chart, this is what I have. I told you guys there's a formation of an upright head and shoulder chart pattern. Upright head and shoulder chart pattern. So this is what we have on the day chart. You can see that. So we are still waiting for the head and shoulder to be confirmed. So the head and shoulder is still going through a transformation period. So let's wait to see what we are going to have. Maybe price is going to break up and then invalidate this potential head and shoulder. But take note, this pattern cannot yet be tagged as head and shoulder, because for a pattern to be tagged as a head and shoulder, it has to have a complete right shoulder. Yes, right shoulder. This is the left shoulder right here. This is the left shoulder. This is the head. This is the left shoulder right here. And this is the head structure right here. And the right shoulder is still under transformation. So we still don't know what is going on. Is it going to form or is it going to break out? So right now we can't yet tag this as an upright head and shoulder, not until the right shoulder has been formed. So if you can see the right shoulder being formed, whereby price make a rotation of price all the way right here down, then we can say yes, the right shoulder has been formed, and then the neckline structure has been formed, right? So this is what we have on the British pound sterling paired against the Japanese yen. So this is what I am seeing on the higher time frame as a swing trader. So as a swing trader, I can't see any reason to long right here or to short. So as a day trader, if you are looking out for an entry as a day trader, as a day trading, that means you are trying to trade on intraday chart. So you have to navigate to the 4-hour, 1 hour, and the maybe 15-minute chart. And then what you need to have is you have a resistance structure at this medium right here. And then this could be a validation of the right shoulder right here. This could be short entry for the validation of the right shoulder to be formed. So for those of you who want to trade on the JPY, you could be looking out for a short entry at this resistance structure. But this short trade right here is suspicious, because if you should take a close view, let's take a close view on the rally from this swing low right here to the peak structure right here. Likewise, let's relay this peak right here to the low we add right here to the high right here. Likewise, from the low we add right here to the high right here. So this is based on momentum analysis. You can see how long it took for price to gravitate to move from this swing low to this high. It took countless of 4 hours bars. So let's try to measure the momentums right from this swing low all the way to this high. You can see it took 30 bars. It took 30 bars. That is 7 days. That means there isn't much momentum from this swing low right here to the high swing right here. Likewise, from the swing low structure right here to the peak right here, it took 17 bars. That is 4 days. It took 4 days within 20 hours right here. You can see that. And it took 17 bars, 4 days and 20 hours. And right from the swing low right here all the way to the current market swing right here, let's measure the momentum. Let's measure the momentum we have right from this swing low right here all the way to the current price zone. You can see it took those 7 bars, which is almost 1 day and 4 hours, which means there is a strong bullish momentum right here. So if you are trying to chart right here, you have to be very careful based on the strong the presence of strong bullish momentum when compared to the previous swings we had right there. So at this medium right here, there was weak bullish momentum. There were weak bullish momentum, but at this medium right here, there is an obvious strong bullish momentum. So if you are trying to chart right there, you are definitely trying to chart again the strong bullish momentum on JPY. So you have to be very careful. So that is why So you have to be very careful. So if you want to chart right here, you are trading against the strong bullish momentum. And this is one of the reasons you have to decide your risk before you make an entry. So in this type of market, if you want to chart, then you have to open a small position size. But based on my own trading strategy, I don't have any reason to chart right from this level right there, because the momentum right there is kind of too strong, right? So there's higher tendency price could still continue in an uptrend. Price could still continue in an uptrend based on what we have on the strong bullish momentum right there, and then continue to break out. So that is my view on the JPY. So let's keep monitoring to see what price is going to offer. If price is going to make a breakout, or maybe it's going to have a rejection. So whatever price is going to do, I'm looking out to trade only the head and shoulder chart patterns of this price transformation on this chart. You can see we have a series of support right here, broken support, then a retest of the supports. And whenever we have a constant retest of a structure within a short period of time, it does suggest there is weaknesses in that point. So this is what we call clustering of price. You can see we have a broken support structure right here. Price gravitated down and then retested again. Price retested once again, and price is testing once again. So based on the fact that price keeps on testing this level within a short period of time, multiple times within a short period of time, then it does suggest this level right here is a weak structure to hold as resistance. Under normal conditions, technically, once a price tests a key level structure, price should precipitate downward aggressively. But based on what we have right here, price keeps on testing this medium within a short period of time. So it means this level right here is questionable. No, it's suspicious. No, that could be a more bullish upward rally. So technically, I can't see any reason for me to chart based on my trading strategy right here. So please, where do you think Gulf will held? No one, I don't know where Gulf will held. It's based on technical probability. So right here, we are trying to define technical probabilities. So I'm not trying to tell you, do this, the market is going to go this, the market is going to do this. I'm only trying to give you probabilities that could make a trend to go up or to go down. So we tend to go with the highest probability. So that is what trading is all about. You analyze the market, you formulate the probabilities that the trade will go in a downtrend, and then you find out the probability that the trade will go in the uptrend. Now you go with the direction that has the highest probability. So that is what I have. So if I'm going to make a decision on JPY right here, my probability definition will start from the higher time frame. So based on what I have on the higher time frame right here, the market is in a ranging medium. So in a ranging medium, based on the higher time frame, I won't take that trade. So based on the weekly chart right there, what I have right here is the market is in a ranging medium based on the weekly chart. So based on the weekly chart, what I have is the market is going in a ranging medium. So why should I be trading in the market within a ranging medium right here? So I have no reason to be trading in a ranging medium right here. So that is why I'm not doing anything on JPY. I'm only looking out for breakout of the ranging medium. And the ranging medium you had right here is being accompanied, if it's been broken down, then it's going to be accompanied with an upright head and shoulder, which we can see on the weekly chart. The right shoulder, the head, and the left. So I want to take the breakout down. And as well, we have a breakout of a rising channel from the weekly chart. We can see the strong bearish breakout. So if the price can break below this rising channel, then it means we are trading a bullish trap trading strategy. We are trying to trade against the bulls right here. So this is my view on JPY. So this is why I'm still not looking for any trade entry right there. I want my key level structure to be validated before I can look out for trade entry, right? So that's my view on JPY. Any other asset? You guys can comment any other asset you want us to analyze. Any other asset you guys want to. So let's go to the chart of US oil. US oil. So US oil, based on what we have on US oil, I'm still supporting a bearish swing on US oil based on what I can have on the weekly chart. You can see we have a test of the key level structure of the 81.310. Can see we have a low high swings right here, low high swing. So we have price moving down again to test this low structure. So I'm still supporting a bearish swing on US oil. But the situation in the Middle East could also have effect on the price of US oil, right? Because if there is a less supply, this will tend to increase the cost of this commodity. So this is why you have to be very careful if you want to take technicalities on this asset, because there are a lot of geopolitical factors going on, that could affect the price of oil. And if there is a shortage supply of oil, this will fundamentally affect the price of oil to go high. So this is why you have to be very careful if you want to take the technicals. So based on what I have on the day chart, I'm still looking out for a breakout of head and shoulder chart pattern on the US oil. So based on US oil, we have the right shoulder right, the left shoulder right here, and then we have the head right above. We have the left, no, we have the right. We have the right shoulder. Let's get it right here. We have the right shoulder right here. Okay, so I'm still looking out to see if price can validate that this is a neckline. Once we can have a neckline structure right here, then there is tendency price could gravitate more down on US oil. So this is what I'm looking out for on US oil. So let's see how far this level will be able to hold our support. Likewise, the key level support, which acts at the price of the 81.310. So let's see how we are going to be looking out for short entry right here. All right, I already sent out a trading signals on the Telegram group. And then if you are going to be taking that trade, you have to execute a very small position size, because this trade hasn't yet been confirmed. The trade entry I sent yesterday is an aggressive entry. So if you are going to be taking an aggressive entry, that means you have to reduce your position size. You have to reduce your position, reduce your risk, right? So this is an aggressive entry right here. So what we are going to what we are trying to do is we are trying to take the breakout of the low swings right here on the forward chart. You can see the low right here, this low right here, low right here. So we try to short the bearish breakout of this low swing right here. We made an entry at this zone, and then we add our stop loss at the upper structure right here. So we are trying to take like a ranging medium in a flow of a downtrend. So that is the idea right here. So this is what we took right here. From this structure right here, we are able to construct it all the way up. So this is just like a ranging medium trade. You can see that. can see, so just like a rectangular pattern in a downtrend. Why some could call this double top swing. So this is why we made an aggressive entry on US oil. So we are currently having a short entry on US oil with a small position size. So if the price can have a strong bearish rejection down all the way down, they will be looking out to add to our short position. So this is how we scale up based on our trading strategy, right? So this is what I have on US oil, but be careful. The condition, the situations, the war outbreak in the Middle East has strong reasons to affect the price of oil, and this is why you have to be very careful if you want to take this trade right here, right? So that's my view on US oil. Any other assets you guys want us to talk about? I already gave analysis on GBP USD. Abdurrahman, check my Telegram page to access my YouTube video if you want to watch analysis on GBP USD. I already gave analysis on GBP USD. Cades, I already gave analysis on XAU paired against the USD. So if you want to take, if you are looking out for trade analysis on XAU paired against the USD, check my Telegram group to access the analysis. I have the analysis on my YouTube channel. So once you get access to my Telegram group, you will get the link to access my YouTube, and then you can watch the analysis on my YouTube channel. Okay, I already give analysis on XAU paired against the USD. Thank you. So let's go to the stock market. I haven't been giving analysis on the stock market for some period right now. So let's go to the stock market. Let's go to the stock of Apple. So for those who are stock trader, let's see what we have on Apple. So this is the day chart of Apple. Currently, we are having a descending trend line on the day chart. So price broke out with a strong bearish bar at the swing low structure, and we had a series of reasons for a more downtrend right from the low high swing right here. You can see the low high swing right here. So price is making a pullback. So the question right now is, can price give us a reason to, can price make a pullback to this descending trend line and the key level structure that acts at the price of the 176.75? Can price give us a reason to make a pullback right here? So this is what we are currently expecting as a trader. And then if you want to take a, what is it called, a descending triangular formation for a sell trade, that is why you need to have your stop loss at the upper band of the previous low, right? So this is why you need to have your stop loss at the previous, because you don't know if the first breakout right here could result into a bearish trap and then price still keep on gravitate upward, right? So if you had make a sell entry, is if you have been shorting the Apple stock from this first breakout right here, then based on the swing trading strategy, this could be on the swing trading strategy. Then as a swing trading strategy, then your stop loss should be at the previous low high swings right here. So a lot of traders have been asking me, oh, I've been shorting the Apple stocks. What do you think? Is price going to reverse? I don't even know where to put my stop loss. So if you want to put your stop loss as a swing trading strategy, so if you made a short entry right here at the first bearish breakout right here, it means you are trying to trade the pattern breakout right here. We are trying to play the descending trend line pattern breakout. And then based on technical analysis, if you are trading a breakout of a descending triangular chart pattern, then technically you should be having your stop loss at the last low high swing that led to the bearish breakout. So the last low high swing that led to this bearish breakout right here is at the price of the 182.18, which is right there. So your stop loss should be right there. So the question right now is, how possible will you be able to make 2 risk to reward ratio to the next key level structure in this market? So the key level structure, which acts at the price of the 157.29 on Apple, that is going to give you 1.2 risk to reward ratio. So this is why you need to analyze your risk before you jump into any trade in the market. So if I were you right now on the stock of Apple, I wouldn't have taken any trade. Alternatively, if you wanted, or if you instead you still want to make an entry, then you should find a way to reduce your risk. Thereby you'll be able to at least achieve the minimum 2 risk to reward ratio. So if you are going to achieve the minimum 2 risk to reward ratio to the next support structure in this downtrend, then if you are making an entry right from this structure right here, from the first bearish breakout, then your stop loss should be around the high of this bearish breakout. So that is the only way you can do it. And if you have your stop loss above the high of this bearish candlestick that broke out of this descending trend line, which was on Thursday, then you have a few points for your stop loss to be hit in the market. So this is why I always advise, whenever you want to take the first breakout to the market, always ask yourself questions, analyze your risk. What is the reason for taking this first bearish breakout? If I take this this bearish breakout, what is the risk or factor? Will I be able to achieve the minimum 2 risk to reward ratio? So this is how you make analysis. You don't jump into the market and then you just take trade. So someone asked questions on the YouTube, says, do you trade smart money concept and week off? I trade based on top-down analysis with key level structures and liquidity momentum. So that's what I trade. Right? So we have a question as well. Is there any other question we have? If you are watching from YouTube, you can ask your question. So someone asked a question from YouTube, said, do you trade smart money concept and week off? No. My strategy is based on top-down analysis. Go to the top-down, analyze your chart from the higher time frame, then navigate down and then look out for momentum, liquidity in direction of what is happening in the higher time frame. So that's just a summary of my strategy. My strategy is start from the higher time frame, go to the monthly and the weekly chart, mark your key level structures once you find it out, and then you look out for liquidity and momentum supporting the direction of what is happening on the higher time frame. So if the monthly and the weekly chart is showing bullish and the day chart is also showing bullish, then what I want to be looking out for is looking out for a pullback, a cut trade pullback on the 4-hour chart. Look out to trade in direction of what is happening on the higher time frame. So before I can make an entry, there must be liquidity momentum in the direction of what is going on the higher time frame. So that is so simple as that, right? So that is all I want to share with you guys. So guys, thank you for the support, thank you for the attendance, thank you for joining the live stream today. I appreciate you guys. So you guys can click on the link in my bio or the link in the description of this video to get access to more trading educational content. So this is what I have on Apple. For those who have been charting Apple, currently if I want to go on a trade right here on Apple, I am still monitoring what price needs to offer. I'm still very careful right here. I still want to see how price is going to react to this level. So based on the 4-hour chart, if price can have a strong bearish rejection downward, then this could be an opportunity to execute a small short entry on Apple. So this is what I'm looking out for. Alternatively, price could still gravitate all the way up to test this upper trend line for a more flow down trend. So that is what we have on Apple. And there someone asked about Tesla. Let's check through Tesla before we wrap up our analysis in this live stream. So based on Tesla on the day chart, we have double top, and then someone asked about Tesla analysis, or I think that was the last 2 weeks, no, maybe 2 weeks or a week ago. And I stated I can see a bearish sentiment on Tesla. So this is still going up. As I stated, this is the first bearish breakout right here. So for those who want to chart based on the first bearish breakout on Tesla, which happened, that was on Monday. So if you want to chart right here, you have to be very careful. The first thing you have to analyze is will you be able to achieve the minimum 2 risk to reward ratio to the previous low swings in this downtrend. So if your take profit will be at the low swing of the price of the 153, which was the previous low high swings in this market, then where should you add your stop loss? Then it means you have to add your stop loss around this high right here, which is along the medium of the doji candlestick right there. So this is how you can approach Tesla. Alternatively, as a conservative trader, you could be looking out for a pullback so that you can reduce your risk and then have your stop loss at the high of this doji candlestick. So presently, this is what I'm looking out for. If I can see a pullback for me to have at least minimum of 3 risk to the reward ratio, then I'll be looking out to have my stop loss at the high of this doji candlestick, which was carved on the 24th Tuesday 2023. So I'm patiently waiting to see what price is going to offer. If price can give me a reason for a entry, that is if I can have a pullback to this key level structure right here, then I'll be looking to make a short entry right here, and then I have my stop loss right here. So this is how I want to approach Tesla. So for those who are asking how I'm looking out for, or what are my view on Tesla, this is my view on Tesla. All right. So thank you guys. Thank you guys. Cadence, you can watch the live stream on YouTube. Click on the link on my bio to watch the analysis I gave on gold, right? I already gave analysis on gold. Thank you guys. Okay guys, so we have come to the end of the live stream. Thank you guys for your support. So I'll be right here tomorrow, 12 p.m. GMT plus